Hello traders, welcome back to the channel. This is Vishal and you're watching weekly sectoral analysis. Before I start the video, I would just like to share one thought from my side regarding the market, especially due to the current volatility which has emerged in the markets in last three trading sessions. I always believe that whenever there is high volatile situations in the market, it is probable that a lot of volatile thoughts also might come in your mind. As we are human beings, we are not robots, so we cannot avoid them. But with mindfulness, meditation, and practicing it consistently, not just one day wonder or something, you should try as a trader to try to stay away from the thoughts of uncertainty or unnecessary fear thoughts of the market. So once you are away from these unnecessary thoughts, you will be able to think and analyze the chart more clearly and act when you have a trade as per your trading system. Fine. Now let's start with the video. First, I would like to go to the monthly time frame chart. Although the candle has not been completed yet, but so far we can see that we have 1 week to go, and we can see that the candle which has been made over here is a shooting star. So far, yes, it's not complete, I agree, but so far it is saying that there is a lot of selling pressure at this psychological 20k level. In fact, if you just have a look at couple of months back, the candle which was made over here, it was not a shooting star, but it had some sort of wick. So even that point of time, things were clear that around that level, some sort of selling pressure was evident, but this degree of selling which we saw in the last week was not expected. Now, if you see this candle, this is not just a big red candle, but the main part over here is this candle is a very confident bullish candle, and the next candle immediately it has managed to open below the close of the previous candle, and it has also closed below the low of this candle. So this is generally in my career, whenever I have seen such candles, the next leg is generally more volatile and more fast on the downside. Although we have some sort of support over here, so it's not very easy to say that yes, now markets has top out and we are ready to go down. But yes, there is some sort of uncertainty which has developed. Along with that, if I convert this chart into a line chart, we do have a higher high in price and lower high in RSI. If you can watch this properly, we have some sort of negative dive, although this is very, very negligible. If I just zoom properly, this is very negligible, but yes, there is a negative divergence. This negative divergence is not that powerful, but the reason for this sell-off, technically one of the reasons is, if you go to my videos which I shared in last Sunday, I had clearly stated that this level of 20,000, 20,200 is a certain resistance band, because we were having some sort of Fibonacci extension in the weekly, daily, and the hourly time frame chart. So you can just go to my previous video, last to last video, which I shared on Sunday, and I clearly stated that we are at a zone of a heavy resistance. And in fact, there is also a trend line where you can see that this is a probable trend line. This is not a complete trend line, but yes, there is some sort of zone where a supply can be probable. Now, it's not very, very surprising that the markets have come down. It was actually necessary, because the way markets went up, it was very much necessary that the market should come down. But generally, as I always say, when we are in a bull run, when we are in an uptrend, generally the degree and the velocity of the correction is slightly slow and the angle is slightly tilted. But this is sort of a vertical fall, not exactly a vertical fall, but sort of a vertical fall, and the speed with which they have corrected, the Nifty spot has corrected, other indexes have corrected, is of little bit of worry. If I just convert this chart into a hourly time frame chart, you'll be able to see a couple of gaps which have been formed over here. Now with these gaps, there is a small silver lining over here, and that silver lining is that in extreme short term, we do have a lower low in price, a higher low in RSI, and we are at a support zone. And the support zone is at 19,720 to 19,601, which I also shared in my previous video. This particular support has yet not been broken. And the minimum requirement from the markets to at least, whatever spoiled market has done over here by falling down with extreme high volatility, it will have to minimum fill this gap. This is the first thing which is necessary. But even if this gap is filled, this will not completely mean that we are out of danger. It will have to go much higher. But this is, you can say, the first step. All right. So I can say one thing that yes, we are down. The weekly candle is not good. There is some sort of uncertainty in the market, but it's not for sure that we are going down. So far, so good. We are at a support. Yes, if we break this support on a closing basis with a pretty big red candle below 19,600 and we sustain below it for a couple of days, then probably lower levels will be possible. Maybe the next level could be 19,430 or something, or maybe even lower than that. Okay. But so far, so good. We are still above this particular support. If this holds on for the next 2 days, maybe 2 to 5 days, also for a week, it is completely fine. Even if we just hang on here, even if we just go up and down, consolidate, it's absolutely fine. So in case if market decides to just stay here, hang on over here, doesn't do much, it's good for the market. And I would refrain myself to initiate a lot of trades in my trading portfolio. I would wait and watch for a proper, strong and confident rise in the market to initiate any sort of short-term swing trades. So next week is especially more of a waiting period. Now let's have a look at the Bank Nifty chart. In the Bank Nifty chart, I believe if you compare the Nifty chart and the Bank Nifty chart, it is very clearly visible, especially due to this particular candle, that there is much more selling pressure visible in the Bank Nifty chart rather than the Nifty chart. Also, one thing is visible, that the candles which have been made over here have a much higher wick in comparison to the Nifty, which is again more negative in comparison to the Nifty. Now this entire zone is a support zone and it is pretty strong. It's not going to be easy for the Bank Nifty to crack, because first thing is that this zone is very big. This band is very, very big, and the coordinates are from 44,640 to possibly 44,150 or 160. So this entire zone is a support. Now how markets behave here, how Bank Nifty behaves here, that is something which no one knows. Next week, we'll have to wait and watch and see what happens. If the market starts consolidating, just stays over here, probably doesn't crack this much on the downside, then there will be a slight possibility that the markets can start rising. But again, just by a sideways movement, it doesn't make sure that the bull run is going to continue. We will have to wait for a proper rally on the upside. Only then the price is confirming that yes, market and Bank Nifty is ready to go north. All right. Now, if I compare PSU banks with the Bank Nifty, it is but obvious. I guess any newbie trader can also say that PSU banks are outperforming, and the way they are going, it's very good. Yes, possibly in the weekly time frame chart, it seems slightly overstretched. So maybe in the next few days, little bit of short-term consolidation cannot be ruled out, especially from the Bank of Baroda stock, which I shared in one of my videos. The way it has rallied, it's pretty good. Needs some sort of short-term correction or maybe a sideways move or something. And after that is over, and if it doesn't correct much, then the rally on the upside will continue. And probably the king of the PSU banking stocks, which is SBI, it needs to step up. It needs to step up. It needs to close above this level with a big green candle, and it needs to continue to rally if the entire PSU banking pack wants to hold strong and go north. Because fine, PNB is also going higher, Bank of Baroda is also going higher, but we cannot rule out that SBI is the main heavyweight over here. Private banking pack, to be very frank, thanks to the volatility in the HDFC Bank, All right. This is the heavyweight in the private banking sector. The way it has been trading since many weeks and maybe last couple of months is extremely zigzag. It's pretty much random. So to be very frank, I don't want to comment on the private banking pack as of now. So far, it looks that we have not broken this particular low and we are also at a decent support. If this low will be broken, then maybe things will be even worse for the entire private banking pack and maybe even a little bit for the market because private banking sector does have a lot of weightage in Nifty. Energy pack. Well, energy pack is one of the strongest sector over here. It rallied, gave a trend line breakout, retested it. It's going up. Even in the daily time frame chart, it has rallied. It's trying to consolidate, trying to correct. Only one bummer, only one bad thing is that Reliance is not supporting. Although Reliance is currently trading at a support zone, and if I just plot a Fibonacci over here, it is also trading at a Fibonacci extension support and a trend line support. For the stock to stay higher, okay, for the stock to stay higher, it is very, very important that the stocks doesn't close below 2340. If it closes below 2340, then lower levels can be possible. If it stays above it, then I guess the short-term consolidation might continue for the next maybe 4 to 5 days or maybe even 10 days. Metal pack. In metal pack, I guess this is one of the sectors which lacks momentum because the way the sector has been rallying, you will not see a lot of big green candles, but still you will see only in this zone, the momentum was extremely high. The volatility was good on the upside. But yes, it is very clear that the sector is going up. The stocks within it are going up with lesser momentum, except SAIL. This stock recently rallied with extreme high momentum and currently it is consolidating. So my view on this sector is that as of now, the sector looks okay. No problem with this sector. In fact, the prices have come down. It's an opportunity for the swing traders to try and concentrate on this sector, on these stocks. If there is any short-term breakout in the shorter term charts, then swing traders might be able to hopefully catch it. Autopack. Autopack is surprised everyone by rallying nicely, but if you can see properly, we do have some sort of negative divergence in the RSI. So there is a possibility that in the short term, there will be some sort of consolidation, some sort of short-term correction possible in this sector. But one stock hasn't been able to perform much, and that has been Eicher Motors. Now, what has happened is stock went up, it has corrected. After making a low at 31.32, the stock has slowly and steadily started to grind itself higher and higher and higher. I believe one thing, that the stock is not weak, but probably it needs to close above 34.90 or maybe even above 3500. Once this close happens, there is even a gap over here. Even this gap needs to be surpassed, but positional traders need to analyze this particular stock very, very deeply and keep a watch on this stock. This is the only stock as of now in the auto pack which keeps me interesting. IT sector. Well, IT sector has been performing very nicely after giving this rectangle breakout. It's high time that this sector should now probably go through some sort of just short-term profit booking, just short-term consolidation, and any dip on the downside probably will be bought into, and swing traders should not miss that particular chance. Finance pack. Finance pack, as of now, I would like to stay away because a lot of stocks within the finance pack are also included in the banking pack. And if you have a look over here, we already have a lower high. And if this low is broken, then we will be heading towards on the downside. If this low is not broken, if we just test around this level, but we don't break it, then possibly we will keep consolidating maybe for next few days or maybe few weeks. So try to stay away from the sector, but There are also a couple of stocks which are looking interesting. One of them is Bajaj Finance. Swing traders should keep a watch on it. And the next stock is Bajaj Finserv. Again, over here, traders, momentum traders should surely keep a watch on this particular stock. FMCG. FMCG continues to consolidate. It has corrected from the higher levels over here. It's corrected nicely. It's showing pretty good resilience to not go below this level and continuously consolidating in the daily time frame chart. And if you check properly, that this is the first low, this is the second low, this is the third low. Now, this is the first time we have managed to make a low which is higher than this one. This is the first, this is the second. Now, if we possibly close above this high, this will be the first sign that something positive is visible in the FMCG pack. And obviously, the king of FMCG pack is ITC. So even ITC is trying to follow the same thing, but the candles made over here are not that bullish. So if this stock closes above 465 or something, then traders should start concentrating on this particular stock. Consumption pack, again, if you see properly, it has rallied pretty nicely, needs some consolidation on the sideways, and once that is over, an upside rally can continue. Infra pack recently rallied pretty nicely. Probably it's time to go sideways a little bit. Overall trend stays higher. Only worry over here is that we have a negative divergence over here, but this negative divergence is not that powerful in the infra pack. So it's very difficult as of now to comment anything what might happen in this sector in the medium term. If this sector corrects little bit in the short term, consolidate, but after the consolidation, if it starts rallying, it will be good for the overall market and the swing traders. Pharma pack is pretty much overstretched, and it seems that after a nice rally over here, it has managed to give a lower high in the price, and this is the previous low in the daily time frame chart. We are already trading near that. So this is the first sign that pharma pack is in a mood of consolidation. If this level is cracked, somewhere around, you can say just about 14,800, if we close below this, then this will be the first sign that pharma pack is trying for a short-term to medium-term correction. So if you are a trader who is holding the stocks as a positional trader from these levels, then try to trail your stop losses pretty much aggressively in the pharma pack. Real estate. Again, real estate recently has rallied pretty nicely. It's trying to come down, and after coming down, if it consolidates and starts going higher, it's fine. But if it breaks this low of 520, it will be problematic for this entire sector, because we can see even in the weekly time frame chart, we do have a higher high in price and lower high in the RSI. PSU sector is continuing to look overstretched, overbought, and RSI at 77 in the weekly time frame charts. We can clearly see that we are trading at a 261.80% Fibonacci extension in this particular sector, and how nicely this sectoral indices chart has retraced just a little bit by respecting this sector. Some sort of correction or some sort of sideways move could be probable in this sector in the next few days. Overall biasness continues to stay bullish. Mid caps, as of now, it's very difficult to say because we just have one candle over here, which is a hanging man. This candle is not that big where I can actually say that we are probably in a top out situation or something. But currently, I can say by looking at both the time frames, by daily and the weekly time frame charts, that we are in for a sideways consolidation in this particular sector. And after the sideways consolidation, we'll be able to decide whether the sector wants to rally or whether it's starting to correct after a very big rally. Only time will tell. So let's wait and watch for next few days, and only then we will be able to decide. So summing it up all, I would say that we are in a situation of indecision. We seriously don't know what's going to happen over here. But my plan for the next week is to trade very, very less, wait for the market. Let's see how price action develops, how other tools, how other indicators start looking in next few days. If this level is not broken off 19,600 with a big red candle and sustenance below it for a couple of days, then probably we are still safer. And the volatility which has been created over here needs to come down, because any bullish rally cannot continue on the upside with a extreme high volatility. So the volatility needs to come down. Sideways consolidation is important. After that sideways consolidation, if you think that fine, markets have consolidated for 2 trading sessions or 3 trading sessions, we are in for a rally, the answer is no. Because the reason is, after a very large correction in the short term, say for example, short term means the hourly time frame chart. I'll just try to convert this chart into the hourly time frame chart. It is possible that we might pull back a little, consolidate, and then suddenly we give up. So do not make the mistake that if we just give up the volatility, if we just consolidate, we go a couple of 100 points higher in Nifty, and you start believing that we are in a bull run pretty much back. Do not make that mistake. We will need a pretty proper, strong conviction from the market, not just from the Nifty, but even from other sectoral indices and its constituents. So be very, very careful in the next week. Patience will be rewarded highly. All right. So I hope this video has helped you immensely to understand and crack the volatility of the market, and try to share these videos with other traders also, so they can find it helpful. And just one disclaimer, whatever stocks I have discussed in this particular video, please do the due diligence, please do the analysis at your own end if you want to take any action in these stocks, because I'm not sharing any calls or any trading calls. I'm just sharing the reasons for a particular sector or a particular stock to go up or down. All right. Take care, trade less, trade safely. Thank you.